Welcome back to Outsourced Alpha. I'm Derek Shanahan. For those I don't know, please reach out if we haven't met. So today we have an extra special guest on today's episode, John Broch from Alpha Alternatives, so very fitting. And, John and I have crossed paths on a number of panels and across shared clients and prospects. And basically, if you want to know where the industry is headed across data or technology or change management, just find out what John was talking about 6 months ago, follow Juniper Square, and you're pretty much covered across those two sources. John, welcome to the program.
Thanks, Derek. It's great to be here.
All right. So let's start pretty broad, and then we'll drill into some specific questions that I'm dying to get answered here. So give people a lay of the land. When people hear consulting, when they hear Alpha Alternatives, what do you actually do to start basic? And what does your work specifically look like there in practice?
Yeah. Personally, I've spent 24 years in private markets, about 60% of that developing solutions for the industry, and about 40% of that providing consulting services and answering those hard questions that firms are really struggling with and looking to get answers to. Day to day, we're spending time with CFOs, COOs, partners at private equity firms, really acting as a strategic advisor, as a thought partner, helping them think through some of those tough decisions around what's the strategy for their organization, and then how do they execute, and how do they achieve their growth objectives as a firm.
Very cool. Thank you. And I know that you can enter an arrangement with a fund sponsor across private equity, commercial real estate, venture, what have you. What does a recent engagement look like? And in other words, who's calling you? At what point of their visceral pain journey do they pick up the phone and think Alpha Alternatives could be a good shout? And what does the actual work look like once you're in the door to start? That'd be a good place to go.
Yeah, I mean, there's so many different ways that those client journeys take shape. But I'll tell you, a typical one is you've got a CFO joins a new firm, really, and wants to establish a vision for what the future of that finance function in the organization looks like, and what should talent look like on the team, what types of roles, centers of excellence should be set up, what are the ways in which outsourced providers should be leveraged. How should they be thinking about technology? And really, it starts with helping that CFO cast a vision for what the future should look like. I think one thing that's truer now more than ever is the pace of change just continues to accelerate. And I think long gone are the days of having a 3-year transformation plan and having that locked in. But still, it is paramount to have a vision, to be able to communicate that effectively. And what we find ourselves partnering with the C-level on typically is really these change journeys. How do you build credibility? How do you establish that vision? How do you start to get some wins on the board? But then also still have the thought partnership and the ability to flex as changes happen on the ground, because our world is just changing faster than ever. That is a very typical way for a client journey to begin. But life isn't that clean and simple all the time. So sometimes we're also, jumping in the middle of a project that might be going a little bit off the rails and trying to course correct that. So it really runs the gamut. But that's a very typical scenario, the one that outlined.
I'm with you. Yeah, it's interesting when you think about where a GP invests an incremental dollar. It appears to us anyway, and I'm guessing you might agree with this, that you have operations, you have IR, you have deal making, underwriting. It seems as though there's a severe underinvestment in operations. And the gap is where a lot of the institutional capital and those allocations get lost. Is that a fair statement, or would you challenge that from where you sit?
I would say that the finance portion of an organization, it is the lifeblood of a private equity firm. And I think it's always going to need a pretty sustained investment. There are certainly a lot of inefficiencies that remain within the finance function, both on the fund side and on the firm side. The firm side of finance has been very underinvested in, very neglected. And we're seeing a lot more focus being placed on firm technology, expense allocations, GLs, being able to have a good audit trail for how expenses are handled and be able to show that to investors and to regulators. So there is definitely like a surge of investment on the firm technology side. But again, there are still a lot of dated ways in which the finance function on the fund side operates as well. Like cycle times are really long for quarterly reporting cycles. There's a lot of effort. There's a lot of duplicative tasks taking place between a fund admin and what's happening in-house. It's still a ripe area for transformation.
It seems as though there's a bit of a forcing function, and there's a lot of discourse on what's causing that. You look across the three different buckets that I see and we see regularly. You have the LP pressure, which we've talked about just a bit ago. Institutional funds want to see more. They want transparency. They want more operational rigor. Then you have this notion of scale growing against complexity, which is obviously an issue. And then you have data. So you're trying to juggle all three of these things together. And I'm not sure that anybody within the confines of a fund really know how to take ownership of that until they work with a provider or a consulting firm or what have you. So what would you say about those three? Maybe we can start with what LPs are expecting nowadays from their funds and just how allocations are getting made on operational due diligence rather than just historical track record and DPI and things like that.
Yeah, absolutely. I think certainly we are seeing a lot of accommodations for how LPs can come into the funds. You see your separate managed accounts, you see your co-invest strategies. There's lots of, and really actually, Derek, if we step back, like what's really driving all of this is growth, right? So you want to concentrate, the GP does relationships with fewer LPs, have larger relationships in many cases. We hear that over and over again. But when you pull that growth lever, right, there's some implicit complexity that comes with that. And so now you need to design your organization in order to handle all of these special accommodations, these reporting requests that you've signed up to. And so that's really the needle that firms are trying to thread is we've pulled this growth lever. We now need help navigating this complexity. So how do we do it in the optimal way, in a way that scales and it doesn't break the organization? And we can also do this and grow in a profitable way. So it's really growth with profitability. It's kind of like the overarching story that's behind a lot of this. And so I would say that's the backdrop for really these more operational types of discussions. But then underpinning all of this is really good data structuring, good data management, having disciplined processes. And we really think of it as an area of continuous improvement for the firm. It's not something you do and then you forget about and you move on. It's hygiene. It's being able to just keep that system running and continue to be able to serve up good data to investors in different vehicles that they might be coming into the funds in.
Yeah, it's interesting. It seems like, and we'll get into the other two in a minute, but you have these firms that really aren't the ones that have had an epiphany about technology necessarily, but they've hired a really good COO, a really good CFO, and that person or those people have felt the need to change the infrastructure and change the strategy. But I guess the question that I have for you is, at what point is it a breaking point for a fund? In other words, is it fund 3 to fund 4? Is it a new product line? Is it a new jurisdiction where they say, look, I can't manage this in Excel anymore. I'm really operating on this super sensitive layer of data. I need help. Like, what is that breaking point and how would you describe it?
Yeah, I think talent is really where you'll see that breaking point is you could continue to throw bodies at the problem for a certain amount of time, but there really is a shortage of talent. So what some of the more provocative discussions that we're having, the CFOs and COOs are really around what should the talent look like in the organization? And what we're seeing a lot more are strategic hires in key functions that are really focused on driving specific outcomes for the business and complementing that with really strong investment in technology and outsourced providers. We're seeing that play be run over and over and over again.
Yeah. And without, I guess, good data infrastructure and data hygiene on the third point, none of this works, right? And sort of thinking about a data strategy from day one or day 1000, depending on when they start this journey. So on the data problem, do you think firms are actually solving it at the grassroots, or are a lot of people just trying to plug interfaces and platforms on top of what is otherwise underlying chaos when it comes to data?
No, I think there's a recognition that you need to have clean data systematized. I think there's an understanding of that. There are certain ways to maybe shortcut that, maybe make it someone else's challenge to become a little bit insulated from some of that. And I think, frankly, to raise your hand and say we need help in certain areas. Because if you want leaders in your organization to operate from more of a strategic view, be more outcome focused, you also have to be able to extract them from the details of keeping the data up to date, keeping it right, and give them partners that can help them along the journey. And so we're seeing a lot of that, like a recognition that you can't have the same folks setting the strategy, driving the outcomes, also maintaining the data. And so much more of a willingness to think about how to leverage an ecosystem of support really to help the organization grow and to scale. And that translates down to data ingestion, data hygiene, data quality checks. There's a lot of support out there now for private markets firms. They don't have to go this journey alone.
Yeah, ranging from the fund one all the way through some of the massive institutional funds on the market, the behemoths, there's always an issue to solve for. And I guess if we think about being outcomes focused, so you mentioned outcomes a moment ago, what is a concrete example where getting operations right, as opposed to being subject to the diminishing return of poor data and poor hygiene on the operations front? What does good operations open up strategically for a fund that maybe wasn't available before to that very same fund?
Yeah, there's probably a lot of examples, but where I go right away is thinking about the treasury function, because you can think about it as you're just managing cash, you're just booking wires, you're handling calls, you're doing recons. You can put a very operational lens on that. But I'll tell you, when we engage with our clients around strategic initiatives for treasury and set the frame large enough, that is an initiative that almost always pays back the return on investment in multiples. Because you take a strategic view to how you run that function, you're thinking about how to optimize liquidity, how to optimize idle use of cash, consolidate relationships with different banks. There's so much upside for that. And it's really just kind of framing the challenge and the objective a little bit differently. That can very quickly become a revenue generating activity for the firm as opposed to a cost center.
Yeah, and we start to see that as a kind of a natural transition into how these firms are solving it. In other words, tools they're implementing, solutions that are being put in place, data strategies and data schema. And a lot of firms have gone out to the market and invested in, say, point solutions. So you have a reporting tool here, you have an LP portal here, you have a data warehouse there. And fundamentally, there's an underlying integration problem. And whether you call it integration, whether you call it data aggregation, it seems as though, and you've been in the industry longer than I have, people have been trying to solve for this problem in private equity for, the better half of 15 years. So how close are we to data aggregation, data standardization? Because in the world of generative AI and MCP and all of these fun things that we're all wrestling with, it seems as though that is a necessity rather than a nice to have. And I'm curious what your perspective is on that.
Yeah. So think about on the data aggregation side, we're thinking about client life cycle. I like to take it back to the bigger picture discussion, which I think for our clients is really about fundraising effectiveness and relationship management. Like that's our clients want to raise more dollars. They want to raise them faster. They want to tap into the alt to wealth channel, which has a lot of underlying data implications in terms of how to serve that market, and also continue to, I'd say, tend to and care after the institutional LP angle. And so there's a lot of fragmentation when you think about, where you maybe unpack like the institutional LP client experience, where you've got marketing websites and data rooms, and then you've got investor portals and the CRMs underpinning that. There's a lot of data to be able to stitch together there. And then you've got the kind of the wealth channel, where we need to serve up data to intermediaries that might be distributing products to that market. And so I would say, like, being able to step back and understand the overarching objective, that there are really two different constituents to serve, but there is a common set of data that needs to be accessed in order to serve both of those channels is really important. And I think when firms do step back and they kind of recognize that, they stop engineering separately for those two different problems, and they start really thinking in a more harmonized way about the data that they need to look after in order to serve those channels. So we do spend a lot of time like stepping back with our clients and thinking about how to reframe these data challenges, because in many respects, it's not a data challenge, it's a fundraising effectiveness challenge, right, on the client side. There's a similar challenge on the investment side, but that's really the overarching like growth objective there. And data is a necessity in order to accomplish that strategic business goal.
So we talk a lot about retail and wealth and the democratization of private funds and private markets. What is your unfiltered take on everything? Is there, are there legs to this? Do you think there are limitations? You mentioned reporting and data. What's your overall perspective and thesis on where it's going?
Yeah, I think it would be silly to ignore the alts to wealth channel entirely. Having said that, by definition, alts to wealth is a lower margin business. There's other costs that are a part of that. So what we see almost every firm doing unequivocally is putting themselves in a position where they're managing and structuring their data well in such a way that they can turn that on when they decide to do so. Some are front running that and really want to be leaders in that space and want to tap into that right now. And it's available to do. And many are seeing positive results from it. And then there's others that are saying, let's lay the groundwork, let's have the infrastructure in place. And when we need that, let's do it. But if we can go raise a 10, 15, 20, $30 billion flagship fund from institutional LPs, have a much more consolidated client base, we don't have to go there right now. But let's not bar ourselves from doing so in the future.
It's a good point. And having the infrastructure to be able to turn on that switch down the line is key, because we don't know how much will go deeply into the RIA channel or the broker dealer world across strategies. And you see issues with credit accessing the quote unquote private wealth channel already with gating restrictions. And so I guess having the optionality is probably the most important thing to keep in mind there. Just to move on to like the classic conundrum of buy versus build versus integrate. I'm sure you get this question a lot, and somebody's coming to you with a clean slate. They say, look, I have a bunch of spreadsheets. I have kind of vibe coded some tools of my own using Claude and Cowork. However, I haven't really built a institutional infrastructure yet. Do you have general guidance on the buy versus build versus integrate conundrum, or is it really a case by case that you work on with these clients?
Yeah, there's a little bit of case by case nuance. But if it is a clean slate, it's a firm that doesn't have systems that are in place that are working. There are a couple of areas where you might rethink a typical buy decision these days. I think AI is giving a lot of opportunity. There's a lot of potential there. And it's at least a consideration. It's prudent to at least put that on the table and consider, what does it look like? Are we able to achieve something better? We don't typically advise clients to not buy solutions in market. If you have something available off the shelf that works, you should typically go that route. You're going to have a lot of peers that are using it. There's a lot of other benefits, right? And your core business is not developing technology. But if there are areas where you're just not enthused by what is out there in market, there are too many gaps. You don't feel like the solution that you would be selecting is going to be something where you can drive adoption and get folks excited about. You might consider a build option today that you wouldn't have thought about 3 or 4 years down the road. And it is easier for a firm that has a clean slate and doesn't have existing solutions in place to consider that option. But it's definitely coming up more than it has historically.
Yeah, it's a good rubric to keep in mind. And I think if you overextend yourself and you invest in tools too early on, or you try to build something too early on, that could be a multi-year expense for you that otherwise could have been diverted to something that is more practical. So it's good to keep in mind.
Yeah, it's exciting to see the capabilities of these tools, but we have to also keep in mind there's a cost to maintaining them.
Sure.
We had an interesting discussion the other day with another firm around AI application sprawl and what is a healthy level of that, because some application sprawl means that actually you're being innovative. People are really pushing the envelope. So there's a healthy amount of disorganization to have in place. It shows you're being inventive. But there's also a point at which that becomes just too difficult to govern and very costly. And so trying to thread that needle and figure out what the balance is for the organization, their level of risk tolerance, their desire to be innovative versus middle of the fairway. It's a little bit of a different answer based on the style of the firm, but definitely a discussion that's being had quite a bit now.
Yeah. Well, there's a bit of discourse in the market right now with generative AI. I don't know if you've noticed. And on one hand, you have the signal, and on one hand, you have the noise. I feel as though a lot of GPs are doing their best to build things quickly and aren't necessarily thinking about the maintenance of those tools and the data integrity of those tools. So, what is your take on the signal versus the noise today when it comes to generative AI in private markets?
Yeah. I think we're at an exciting point right now. I think all of the citizen-led AI development is a really healthy thing. It's stimulating a lot of great discussion, a lot of great ideas. But I think the tough step for everyone to make is going from individual productivity, something that is interesting, to solutions that are actually multi-user applications. That to me is a really critical inflection point where you go from doing something that's useful for Derek or John to something that is actually embedded in a team's operations. It's being used by multiple users. That's a really important proving point. And it is a great indicator of a firm's maturity when it comes to the AI journey. And you can see the progression of things going from individual productivity to a multi-user application to full agentic AI, figuring out where human in the loop still exists and things like that. But I think there's a lot of excitement, a lot of energy, probably not full appreciation for what is the cost of managing this in the long run. And I think firms are still really developing a view on what do they want to build versus where do they want to partner, where do they need to bring in expertise. But right now we're seeing a lot of ideation, and I think it's fantastic. It's really healthy, but it is important to frame it as ideation because for this to really stick and to become a permanent part of an ecosystem, there's still a lot of the hard work now that has to come after the excitement and the noise kind of dies away.
Fair enough. So, I guess to close out here, if somebody's listening to this right now, maybe it's a CFO and maybe they just started in a new firm and they say, man, I don't have a data strategy. I don't have technology. I don't really have much in the way of change management. I have just a clean slate to work from. I guess two questions. The first of which is, where should they start? What's a simple set of best practices where they should start today? And what is something they should absolutely avoid doing that is typically the Achilles heel of an unsuccessful fund?
Yeah. So I think you can't go wrong with just establishing that vision and a blueprint where you want to go. And acknowledge it's not going to be perfect. But if you have 80, 90% down on paper and you can get the organization rallied around that and set a vision for where you want to go, and do that alongside some guiding principles for when you'll buy, when you'll build, when you'll outsource, when you'll do it in-house, that will pay dividends in the long run for sure. It's not a long exercise. You do it in conjunction with a thought partner, and that really helps to kind of anchor all future work because you can link it back and say, is this tying to the vision? Is it tying to the strategy? Are we adhering to the principles we set out with and said were important to us? So that's where we really advise folks to start. I think there are a few like no regrets technology and servicing decisions that you might be able to make. And it's good to kind of carve those out because those are things that you could probably proceed with and don't have to slow things down for having a strong vision in place. But I'd say really be careful about, making a lot of technology decisions, making a lot of decisions around outsourced providers and things like that without having that plan in place, because the cost of doing it and having to unwind it is so much more than just doing a little planning up front and really, really going into it with a strategy that you have conviction around. And I think having that conviction is critical to starting to build up speed on your journey and get to the finish line faster.
I agree. And it's always worth knowing the right questions to ask as you are evaluating service provider partners, trusted advisors, anything you want to use in the way of outsourcing alpha, not to be too cheeky here, but there are good rules to keep in mind as you go about those conversations and evaluations. So thank you for that. All right. Well, this has been helpful. And anybody who wants to reach John, obviously, you'll have information to be able to do so. You'll have his LinkedIn, you'll have his email address. So please feel free. A great resource for anybody that's exploring operational transformation, digital transformation, and just a fantastic guy all around. So John, thank you so much for the time. I look forward to seeing you soon and hope you have a good week.
Thanks, Derek. Appreciate you having me on.